Thank you, everyone, for joining me today. It's near and dear to my heart as the Executive Director of FinTechs Canada, competition in the financial sector. Many of you have likely heard the joke that Canada is a stack of oligopolies in a trench coat. Some think banking is one of those parties in that trench coat. If you're like my buddy Dave, though, at RBC, you might think otherwise. He was on the record not too long ago saying banking is actually a ruthlessly competitive oligopoly. To discuss this and so much more, our very esteemed panelists, Sophia, Anna, and Tim. We're going to have a conversation about competition in banking. I'll direct them to introduce themselves and give some opening remarks before we jump into a moderated Q&A. I encourage you, if you're watching, to send in your questions. We would love to put them to the panelists. With that, Sophia, would you like to go first?
Yeah, thanks so much, Alex. Super excited to be here, and thanks everyone for tuning in. My name is Sophia Cote, and I head up the public policy and communications function at ShakePay. Probably a lot of you are wondering who ShakePay is. So we're a fintech that's headquartered out of Montreal, and our co-founders met at McGill University, and they founded ShakePay in 2015. And we've gone through a little bit of an evolution. Back then, the platform looked quite different. Before, we offered a Bitcoin loadable Visa card that customers could spend in retail stores. But in 2018, we decided to change course, and we really wanted to figure out how can we be a platform that encourages, savings, and how can Bitcoin be one of those savings tools that over the long term can accrue in value. And so today we are really focused on being a platform where traditional finance and Bitcoin can really coexist. So when you go onto ShakePay, we're not going to have hundreds and thousands of different cryptocurrencies. We're not encouraging you to trade those. We really only offer Bitcoin and Ethereum, with Bitcoin really being our sole focus, but that's built on top of traditional payment products. So for example, we have direct deposit. Every time you deposit your check, you could earn between $0 to $1,000 worth of Bitcoin, for example. We have something called shaking sats, where every day you can shake your phone, you can earn Bitcoin that way. We have a prepaid Visa card. Again, you can, every time you make a payment for something, you can earn cash back in Bitcoin. And so that's really who we want to be. We don't want to be a crypto trading platform. We don't want to be a fintech just focusing on traditional finance. We really want to merge those two worlds together. And I think we've come a long way since 2015. We have over 1 million customers across Canada. We have 95 employees across Canada. But, we are really innovating on, table stakes. Like, we're really innovating with our hands tied behind our backs. It's very difficult to access the entire payments infrastructure network here in Canada. We have to really be creative with how we do certain things. And that, of course, takes away from us innovating and trying to figure out the best products for our customers, because so much of our time is spent on all of those other things that in other jurisdictions, fintechs don't have to worry so much about. And so I think ultimately, when you're a fintech in Canada, you really are treated differently. It's difficult to access infrastructure. You're trying to figure out how to find your banking relationship, and you're trying to do all this while also trying to be competitive and trying to, make sure you grow your customer base. So I'm very excited for this conversation. I think there's a lot to unpack. And I think as Canadians, it's hard to miss something that we never really had. Unlike Uber or Lyft, where you go to other jurisdictions and you try it and you say, oh, I want this in Canada, we don't really have that with banking. So unless you've lived in another jurisdiction or you're a policy wonk and you've done a lot of research, it's hard to know what's really lacking here in Canada. So I think this is going to be a really exciting conversation, and I'm looking forward to unpacking it with everyone.
Thank you so much, Sophia. Anna, you're up next.
Perfect. Well, great to be here today, and looking forward to having this discussion as well. I'm Anna Bador. I'm Senior Director, Legal, Personal Banking, Lending and Wealth at Equitable Bank. It's a bit of a mouthful, but at the end of the day, I'm on the legal team over at Equitable Bank, and very happy to be part of the conversation today because competition in financial services is definitely an issue near and dear to us as well. At Equitable, we are on a mission to drive change in Canadian banking to enrich people's lives. So what does that mean? We essentially see ourselves as a challenger bank, and we see that as a mindset. So it really means, at the end of the day, essentially driving innovation in order to provide services and products that enrich people's lives and make essentially, the financial market a better place. We have a lot of examples of these types of products. The classic one would be our core product, the personal banking, the personal account, which is no fee, no minimum balance, and interest is provided. We recently as well launched a small business banking account as well. Again, no fee, no minimums, and interest is being earned. So these types of products are unique. They're kind of hybrid between a checking and saving account, which you would see with the more traditional banks. They do provide, much better outcomes for those that have those types of products. And, higher level, Equitable Bank is the 7th largest bank in Canada by assets. So that puts us in a really unique position from a competition perspective, and really gives us, an interesting outlook. We are essentially the largest of the small and medium-sized banks. It's a shrinking pool, as I'm sure we'll chat about further in our discussion. And, we do see the unique challenges for that demographic of financial institution. So looking forward to chatting further and happy to be here.
Thank you, Anna. And Tim, you're up next.
Thanks, Alex. Hi, everyone. I'm Tim Sargent. I'm the Senior Fellow at Macdonald-Laurier Institute. I'm also the Director of the Domestic Policy Program here at Macdonald-Laurier. I was a federal bureaucrat for many years, and I was in charge of the Financial Institutions Division of the Department of Finance for a period. About 15 years ago, I was also later Associate Deputy Minister at Finance, and the financial sector policy was part of my bailiwick there. So I've had quite a lot of experience of these issues from the government side. But before I joined the government, I did a PhD in economics. And so I also very much have an economist's perspective on this issue. The one thing economists in Canada are very concerned about right now is our weak, in fact, almost non-existent productivity growth. And from that perspective, the financial sector is a very important part of the economic puzzle in Canada. It's about 9% of our GDP. It's one of our highest paid industries. GDP per capita in the financial sector is about 50% above what it is in the rest of the economy. So just as industry in and of itself, it's very important. And of course, it's one of those what we call network industries. So the productivity of the financial sector, like the transportation sector, for instance, or the energy sector, has implications for the rest of the economy, how well the rest of the economy can run, particularly retail and sectors, but other sectors of the economy as well. Everybody needs the plumbing of the financial sector. And governments have been very enthusiastic about regulating that plumbing. Certainly when I was at finance, I used to sit around a table with the Bank of Canada, the Superintendent of Financial Institutions, the Canadian Deposit Insurance Corporation, the Financial Consumer Agency of Canada, and that's just at the federal level. You also have provincial regulators as well that play on provincially regulated industries. And one reason we see a lot of regulation, of course, is because we want the financial sector to be productive, yes, but they're also, we worry about bank failures, prudential motives. We want to protect consumers. I mean, those are it's a very complicated area for consumers, and we're also worried about things like cyber risk, for instance, because the financial sector, as I say, it's critical infrastructure for the economy. And certainly, when I sat around that table, I can say there weren't a lot of people thinking about more competition. Often when you're a regulator, competition is something to worry a bit about, right? You bring new people in who don't really know the rules. Maybe they're smaller. You worry they're not as robust, more likely to fail. And it's quite a different perspective than we would have in regular industries where, as an economist, competition is the holy grail, and the more competition, the better. And if firms go bust, well, that's just part of the competitive process. And certainly, again, with my economist hat on, when you look at the numbers in terms of how well does the financial sector serve Canada, you look at how much it costs to do basic banking, to change foreign exchange, for instance. I'm originally from the UK. My family is all there. I go there often. And so I can actually see in the UK how much of a better deal you get if you're at a UK bank on things like savings rates, for instance, foreign exchange transactions. So I think it's pretty clear that Canada does lag behind from a consumer perspective. You could say, well, Canada didn't have a financial crash the same way the UK did, and that would be a fair comment or something we will get into. But I do think the issue of financial competition, competition in the financial sector rather, do we have enough of it? Do we have a sector that is insufficiently competitive? Do we have barriers to entry? Why are we not seeing more of a fintech sector that we see in the UK, in the US? I think these are very important issues, not just for the sector, but for the Canadian economy and for Canadian consumers.
Thank you all for the introductions and the opening remarks. Competition in the financial sector is very important, not just to make a go of it in the financial sector, but as Tim, you pointed out, the financial sector is special to the rest of the economy. So before we talk about ways to promote more competition in the financial sector, I'd like to get to the bottom of whether or not we even have a problem in the first place. Some people say yes, some people say no. First question to this group, how do we know there's a competition problem in the financial sector?
So I'll kick off there, just since I have a few numbers at my fingertips. So C.D. Howe Institute did a run of this, and they looked at, this is a study that they did back in 2018, and they looked at the interest rate spread, so for a small business, and asked, if you're a small business, what is the interest rate you pay compared to the prime rate? And Canada ranked very, very poorly on that. The spreads in Canada are about 2.5%, whereas if you would go to Sweden or France, who were doing the best, it was about 0.7%. Everybody else was certainly below 2%. And you can look at consumer fees as well. So when you just look at the price of what banks are offering in Canada, it's certainly the big banks. We do seem to be out of line with other countries, and we do have a fairly protected banking sector in Canada. There are a series of regulations that make it very hard for investors to come in and buy a Canadian bank. It's almost impossible. So, I think there is, if you look at the price data, there is a sense that Canada is lagging a bit. And again, we have, by design, created a sector that is certainly for the big banks insulated from competition. So it shouldn't come as any surprise.
Yeah, maybe I'll jump in. I completely agree with everything Tim just said, and I think there's two kind of proof points I wanna bring up in terms of like, do we actually have a problem? And Alex, I think this is something that you had actually brought up to your members at FinTechs Canada, that the Canadian Federation of Independent Businesses, they put out report cards, and they put one out for banks, and then they rank the banks across a number of margins. And according to one of their reports, Canadian banks did really poorly across customer service, fees, access to credit. And there was even one big bank in Canada that received a 0 out of 10. And I think this is when we ask ourselves, like, if small businesses and independent businesses feel like they're not getting what they need from our banking sector, is this acceptable? And is this something that we want when small businesses and small medium enterprises are really the backbone of our economy? Like, we need to try and improve this. And I think the second thing I wanted to mention from like a fintech perspective is what's really interesting in Canada is the competitors of fintechs are also our enablers. And so in order for us to even participate in the system, we need to actually go to our competitors and ask them to help us even exist. And I think that's a really interesting conundrum. And even if you look at our telecommunications sector, which, by the way, we also are having many discussions in this country that it's an oligopoly and there's no competition. But even if you look there, there's an actual regulatory body that oversees anti-competitive practices, the CRTC, and that just does not exist in banking. And so again, like, if you're a fintech like ShakePay, we need to go to our competitors to even exist and to be able to access the system. And so I think that's a very clear proof point that we do have a problem, and it's something that we, I think, need to fix from a policy perspective.
Thank you, Sophia. Anna, before I get your perspective on the question, I just want to follow up on one thing that Sophia said. for those in the audience who might not know what a fintech is, Sophia, I think it might be good for you to explain what actually is a fintech, like financial technology, like, TD Bank, RBC, they invest a lot in technology. Are they fintechs? Like, what is that term?
Yeah, that's a really good question. So a fintech is a company that is not a bank. So we are not licensed as a bank under OSFI, but we provide financial technology solutions or services. So, for example, let's say you're a Canadian and you want to really understand like your overall financial picture. Where can you save more? Where can you maybe put more? Where can you maybe like find cheaper solutions for some of your payment activities? That's when you could partner with like a financial technology company who would offer you that product and would offer you that service. There's also financial technology companies that are trying to really compete with the banks. So offer, investment products, checking accounts that have lower fees. And we're able to offer lower fees because we have far less overhead costs because we're a lot smaller. But I would say fintechs are very much focused on like, what are technology solutions to financial problems that Canadians are facing? And how can we create those products and offer them into the market so that we potentially enhance what Canadians already have with their banking partners, or we can even compete and try and get Canadians to leave their banking partner and come to a fintech, for example.
Thank you, Sophia. Anna, the question was, how do we even know there's a competition problem in the financial sector?
Mm-hmm. Yeah, so I think maybe a few points, and I'll pick up on some of the points that Tim and Sophia raised as well. So I would say, I alluded to this before, we do have a shrinking pool of small and medium-sized banks, and we don't have, a large number of new banks really in process of adding to the list in Canada. And, that does point to some level of concern around competition. I would also encourage, thinking of financial services more broadly, and I know we'll get to that. It is not just banks, but even, looking more broadly, you do see quite a bit of concentration. Picking up on some of what Sophia was referring to, the Competition Bureau did do a market study on fintech, which had started in 2017 and came out, I feel, maybe probably right before the pandemic, I'd say, time-wise. And there were a lot of recommendations there because they, could foresee that probably there would be some issues around competition and fintechs having the ability to really prosper in the Canadian market. A lot of recommendations there. We haven't seen too much kind of active focus on those. So, that's really, a sign that, notwithstanding recommendations, that there should be a number of things done to increase competition. Maybe not as much of a priority as it should be. And, not the first time that we've seen the Competition Bureau weighed in on financial services. There were a number of rulings and decisions around Interac or the credit card networks, et cetera. So definitely a continuing theme that we've seen in financial services in Canada. And then just picking up, Tim, you rightly pointed to, in the UK, more competition. We do see different mandates of regulators there where financial regulators do have a competition mandate, which is, a legacy here in Canada of us, having come unscathed relatively from the financial crisis and therefore less pressure. But, that was, 15 years ago now. So it would be, I think, time to look at things globally and see how we can better align with the competition drive that we're seeing in other jurisdictions.
Thank you. So the Canadian Bankers Association isn't paying me to ask this question, but I feel like they should. So I might have to send them an invoice. There's conflicting evidence that there's a competition problem in the financial sector. You guys had mentioned a few things, the shrinking pool of challenger banks. I mean, it's a question how many banks there's room for in the Canadian market in the first place. The Competition Bureau's report was mentioned on fintech that identified a few regulatory barriers to entry, but the report itself was quite qualitative and based on interviews with new entrants in the system. There's other evidence we can look at to inform our view here. For example, there are econometric measures of competition in the financial sector, the H statistic, the Lerner index, the Boone indicator. All these things can be applied to the financial sector. And based on the data I've seen, up until about 2015, 2016, I haven't looked at a more updated set of figures, the Canadian financial sector doesn't score terribly compared to some of its peers. The US, the UK, Canada, Australia, all relatively similar. And depending on which measure you use, Canada might come out looking more competitive than the others. Other measures might say we come out looking less. There are also, dozens and dozens of banks and non-bank lenders in the market now. The Bank of Canada has estimated there are thousands of payment service providers. And the Competition Bureau released this report. They haven't really taken any enforcement actions in the financial sector, except for a few forays into payments over the past 2 decades. One question I want to put to this group is how should I reckon with this conflicting evidence?
Sure, I can start off. So one measure that I look at quite a lot is the productivity growth in the financial sector. And the productivity growth in the financial sector in Canada has been not bad. The financial sector has been growing faster than the economy. You look over the last 2 decades, or even over the last few years. But the real question is not how fast is it growing, but how fast is it growing versus other countries. And there, Canada's is not the worst, but certainly we do lag behind a number of other countries. And for me, that's probably one of the key indicators that we need to look at. Counting heads is not always the right way to measure competitive intensity as well, of course. And of course, you're not providing one single product either. It's not a single undifferentiated product where you can very easily calculate the margins on it. There's a whole bunch of different products here, and sometimes it's the products that you don't see, and you can't necessarily measure them, and things that products and services available in other countries that aren't available here, and so you don't actually have a good way of counting that. It's quite possible that the banks are competing. Traditional financial institutions are competing very hard in specific segments of the market. Let's say mortgages, for instance. Based on a business model that probably could be shaken up, could probably be changed, but they don't see any particular reason to change it. Regulators, I guess, don't see any particular reason to change it. So again, it's not that the bankers aren't working hard for their money, and it's not that there haven't been investments in productivity and technology. You can do stuff on your phone quite easily, but it's just thinking about what is the counterfactual, and for there again, we need to go to other countries. That evidence isn't always easy to interpret, but I think there is some there. And part of it is I think we just have to use our common sense a bit, as Anna and Sophia alluded to. A world in which you have artificial restrictions on competition, and a world in which it's hard for new entrants to get in. It's very difficult as an economist not to think that that's going to have some impact on the choices available to consumers and and the cost that they pay.
So maybe I'll jump in next. So before I joined EQ, I was a lawyer in private practice for about 20 years, and worked a lot with fintechs and new entrants. And I'd say yes, maybe there might be a lot of entities that fall within the broad category of financial services, but scaling and succeeding is extraordinarily difficult in Canada. A lot of entities, frankly, would look to the US fairly quickly as a much easier jurisdiction to deal with. And frankly, things are getting harder because the Retail Payment Activities Act is kicking in. The flip side, the kind of tit for tat of the Retail Payments Activities Act is really, entities that are going to be more regulated should be getting access to real-time rail, open banking. Those aspects are lagging, but the RPA is moving forward. So I do think, probably we're going to see greater concentration in payments in particular. And so, already we're in a state where not very many made in Canada success stories and greater consolidation. So certainly, it's a hard field to grow and succeed in Canada.
Yeah, maybe I'll just, I agree with everything Tim and Anna said. And I think Anna said something really important, and that's can our made in Canada fintech sector, can we actually really grow and really meet the full potential that we should be able to meet if we were in other jurisdictions like the US and the UK? And I think, one of the things that if you look right now is if you're looking at who's sitting at the table and really discussing what the future of banking or the future of finance should look like in this country, it's really just the big banks. There's one fintech right now that is a member of Payments Canada, but that's it. There's no other fintechs that are sitting around the table. And I know this will potentially change with the Retail Payments Activity Act and then more membership to Payments Canada. But the fact that that has not existed until now and won't exist for another couple of years is very concerning because fintechs can't get their voice out there. And I think when you look at the fact that open banking has taken like almost a decade for us to figure out, we still don't have a real-time rail. The open banking regime may end up being onerous for a lot of smaller fintechs. So then we're going to have a country where only the big banks and potentially, multinational companies like the Amazons and the Googles of the world will be able to access these regimes. So then what happens to our vibrant Canadian fintech sector that maybe doesn't have the resources to be able to participate successfully in a lot of these regimes, and how will that trickle down and affect innovation and affordability for Canadians looking for different types of banking products? So I think it's definitely a challenge right now for fintechs, and I think we want to have a bigger voice. We want to have good public policy and we want to be regulated, but we also want to make sure that competition and innovation is, of course, taken into account because a market-driven economy is what's going to create competition and not just regulation, right? We have to find a good balance.
So what I'm hearing is regulation that creates pretty high barriers to entry, which will just get higher with forthcoming regulation. Anna, you mentioned that. All of this together reduces competitive pressure in certain financial sector verticals. Payments came up as an example. What does this cost Canadians? Tim, you mentioned, it costs SMEs in terms of access to credit, but are there any other costs that Canadians are incurring because of how the financial sector is structured?
Yeah, I mean, maybe I'll just stick with SMEs for a second. So Canada has one of the lowest proportions of lending to SMEs. So again, going off the CD House study, only 15% of total business lending is from Canadian financial institutions is to small business, and that compares to 38% in the UK, compares to 50% in country like Spain. So we're definitely quite low down there. And I think one of the drawbacks is, when you're in a not very competitive environment, you kind of do the easy things. And so for a banking sector, what's the easy thing in Canada? It's to lend money for mortgages, right? Because you're lending to somebody who has an asset behind that. It's a sure thing. Mortgage defaults in Canada are very, very low. And so that's kind of the easy thing. You're not forced to go out and find small business customers. And it's hard work, and because every small business is different, they have different needs, you have to have the expertise. But if you look at countries like Germany, for instance, or in Scandinavia, that do very well on business productivity and have very thriving small and medium-sized business sectors, you find that one of the linchpins of that is a financial sector that is much more geared to that business sector. So going beyond just Canadians paying a bit more for credit card fees, for mortgages, those kinds of things, you actually I think having an impact on the overall productivity of your business sector, again, because you have a sector that's just focused, I think, on the easy and straightforward things.
Yeah, I would agree with that and support that view. I'd say certainly in financial services, there's a lot of solutions if you're like everybody else. But if you're more niche, it can be tremendously difficult to find financial solutions. And I think that's a real loss to the Canadian market, and that's reflected in higher fees and lower rates of interest. The small business banking account example that I gave of what we just launched, and I know because I had a corporation and I opened business accounts at other financial institutions, and they had tremendously high minimums to not have to pay monthly fees if you're, for example, a sole entrepreneur or a very small business. And so, we definitely are in a situation in Canada where, unless you're falling, within the average, it can be hard to find financial services. And so, between that and slower innovation and, customer service, that's really not, again, intended to, or customer service that's more aimed at, typical types of problems, et cetera. We're certainly in a situation where the lack of competition is just driving poor outcomes for a lot of the Canadian customer base that doesn't fall within, the vanilla customer base.
Yeah, I completely agree with Anna. I think limited competition, it does affect folks who are not the average Joe or the average Jane. Like, you think about gig workers, renters, like new Canadians, like how can they access a more competitive rate for their loan, or how can they maybe find a product or a service that caters to their unique circumstance? I think right now we don't really have that. And I think another thing that I think about a lot is the fact that, we don't have a real-time rail right now. And we don't allow, also, by the way, stable coins as payment, which the blockchain is its own type of real-time rail. And so, let's say you're a small business and a lot of people come in and they're paying with their credit cards, and you run out of all of your stock. Well, the money that you got from those credit card payments, it's not gonna settle into your account for a couple of days. You're not gonna be able to access it. So if the next day you need to restock, well, then maybe you have to take out a high interest loan in order to do that because your funds weren't settled immediately. And I think those are things that we can easily fix if we have more competition, if we actually launch a real-time rail or allow stable coins as payments or have open banking. And so these are like little anecdotal pieces of how small businesses and how Canadians right now in their unique circumstances are maybe not getting exactly what they need.
We're heading into a year where there's going to be an election, maybe sooner, who knows, and maybe there'll even be a change at the helm. What are the three things a government could do to make the financial sector more competitive in, say, their first year in office?
Maybe I can start. I'm happy to. I think I know open banking is kind of like the really hot topic right now. It's great that we're seeing progress. It's great that we're going to see, a legislative framework come out later this year. But I think obviously one of the big concerns for fintechs is it going to be the right type of open banking? Is the accreditation regime going to be tiered? Is it going to actually allow smaller fintechs to participate? Or is it going to be too onerous? I think there's obviously a fear right now that we may follow in Australia's footsteps, where consumer data has shown how costly the compliance obligations have been and how that's deterred overall participation. And so I think that's very top of mind, of course, right now. Like, what is this regime going to look like? And is it actually going to create a more competitive banking sector or financial sector in Canada? Or are we just going to have more of the same because it's too onerous for other smaller players?
Sophia, before you give me the other two things on your list, very quickly, what is open banking for those who might not know?
Yeah, for sure. So open banking is where you, as the customer, you own your financial data. So you can make informed decisions of where you give that data and to who you give that financial data to. Right now, the banks own the financial data. And so if you as a consumer want to move your money to ShakePay, for example, or move one of your accounts over to ShakePay, ShakePay has to engage in what is known as screen scraping, which is not secure and which has its own security risks. And so open banking will just create a consumer first type of regime where the consumer can easily move his or her data, financial data, to a different product or to a different company that helps them with their unique financial circumstance. So that's a little bit of a high level overview. And Alex, I'm sure you probably have more details to add there.
very quickly, what are the other two things? So making progress on open banking in the right way. That's one thing a government could do. What else could it do to promote more competition in the financial sector? Two more things.
Should I continue? Or I can also let others jump in. And
yeah. So why don't I jump in? So before I jump in, maybe just to add on open banking, which, from a Canadian perspective, we refer to as consumer-driven banking at this point. But did want to point, we tend to use consumer as the term in an open banking context, even though really small business is probably one of the main constituents that could benefit from it. And so I just wanted to point out, open banking is broader than just consumer data, even though that's the easiest way to think about it. And I think, the way the legislation has been drafted is probably the primary culprit there, but did want to point that out because I do think that's something to always remember. And, we're huge champions of open banking and fully support, Sophia, what you were saying that, it needs to happen and it needs to happen quicker, and it's pretty essential from a competition perspective. So quickly, maybe just to add two kind of other items to the wish list. One I referred to earlier, a competition mandate for financial regulators, we think would be, a game changer and an important one to think about, to really keep up with other jurisdictions. And then, this third one, maybe a bit niche to small and medium-sized banks, but increasing CDIC insurance. We find, notwithstanding that, we are a very large, very well-capitalized bank, a lot of people, when they think about, keeping money in a bank account, if it's not in the big six, they may get nervous if it's over CDIC insurance numbers. And that cap hasn't changed for a large number of years. So definitely would suggest that that's something to think about to increase competition.
Before handing it over to Tim, can I mention my two other ones really quickly? Because I'm sure then Tim has some three fantastic ones
of course.
to add as well. I think the other two that are really on my mind is really expanding access to Canada's payments infrastructure. So as Payments Canada is working on amending the associated bylaws for the expansion of membership, just making sure that those threshold requirements don't create a barrier to entry for payment service providers. I think that's really important. And of course, I need to mention something about the digital asset space. I think right now, we don't have any harmonized or activity-based oversight of digital assets. And when you look at novel technologies like stablecoin arrangements, they can absolutely introduce more competition in financial services, such as payments. And since the launch of the government's digitization of money review a couple of years ago, there's been very little communication about the findings, the directions of any future work. How will something like a stablecoin that is that's not a security, it's really used for payments in other jurisdictions, how will this be captured under our payments regulatory regimes like the RPAA, for example? So I think that's another area where we need a lot more focus, and we need to make sure we don't fall behind other jurisdictions, and that we make sure that if Canadians want to engage in with stablecoins, that they can do so on regulated Canadian platforms and not go elsewhere or offshore to be able to access those types of assets. So I'll end there and I'll hand it over to Tim now.
Sure, of course. I've stolen all the best ideas. I'll probably just pile on a couple and then one or two ideas of my own. Open banking is, this is key, right? Like you have to be able to allow people to move easily. Just as with cell phone providers, being able to keep your own number makes it so much more tempting and easier for people to switch. We just have to have a way that makes it very easy for people to move their data around and to really shop. Because what we really need to have, if we're going to have a really competitive environment, we have to unbundle banking to some extent. We have to have people using, this app for their foreign exchange transactions, and this app maybe is a high interest savings account and that kind of thing. And so, I think that's just essential. And I think, the other one that's being talked about is just having equitable access to the payment system and making sure, and again, there's a bit of a parallel here with the internet pipe and making sure, when people like, companies, telecommunications company, I won't name anybody, but both controlling the pipe, controlling the network, and also being a competitor. And if to the extent that you have to have that, you have to really have some pretty clear guardrails to make sure that that position isn't abused, and to make sure that everybody can come into that network in an equitable manner. And then the third one I would say is that, I think, writ large, one of the key problems of the Canadian economy is just the regulatory burden that businesses face. And having been in government, I mean, you see these regulations sort of being piled on to each other. And often, a regulation comes in for a good reason, but it's being added to this cumulative burden of regulations. And of course, it's the smaller businesses, it's the startups who face that burden disproportionately. I mean, they can't afford to have like 1,000 people in a compliance unit, right? So the regulatory burden creates these fixed costs. And so what we've seen in some other countries in the economy writ large is a regulatory reform agenda that tries to reduce that regulatory burden by looking at what is actually the cost for businesses to conform with these regulations. Of course, there can be the benefits of the regulation, but I think we need to have a regulatory reform effort in Canada kind of writ large. But I think those efforts have tended to focus on other sectors of the economy, because the financial sector regulators tend to say, well, we've got all these prudential things. You go off and look at regulations in for trucks or something like that, or other parts of the economy. Well, I think we need to take the deregulation agenda in the financial sector seriously, and we need to be doing the work to really understand what is the cumulative burden of all those regulations, particularly on the smaller players and potential players who might come in. And I don't, certainly in my time, I mean, that wasn't work that we were doing.
Just want to ask a follow-up question, because it's been mentioned a few times, and I'm not sure everyone knows what it is, but the payment system. I've had conversations before where when I've mentioned the payment system, people have been like, "Do you mean Phoenix?" And I'm like, "No, not that." So just quickly, does someone want to give like a 101? What is the payment system, and why should, say, like the median voter care about the payment system?
Maybe I'll jump in and others can add, because it's a real rabbit hole to fall down. So I'm trying to figure out the right angle to take here. But so payments is interesting. The more you look at it, the more complex it gets. But when we're talking about the payment system, typically we're talking about the infrastructure that's behind typically debit type payments. Credit payments usually go through credit card networks, et cetera. That's its own bailiwick, but we've got Payments Canada here, which really deals with things like wires and EFTs and so on. And Payments Canada is a member-only organization. It's subject to legislation. Membership is limited to certain types of entities. They have, again, within themselves, different types of rails, as we refer to. And real-time rail is something that will be coming in the future, that's being built, where membership will be expanded, but that's some time away. So right now we've got rails that really can only be used by banks, and so that means that if you're a fintech in the payment space, you really need to work with a bank in order to get access to that system and all the underlying capabilities. So you essentially have to rely on an intermediary, which may in some way be a competitor.
One thing strikes me about a lot of these things. They often require more regulation. We talked a bit about open banking. That requires legislation, that requires the government to allocate rights, roles, and responsibilities across the different actors in the ecosystem. We talked about the payment system just now. Access to the system you mentioned, Anna, is governed by the Canadian Payments Act. Sophia, you mentioned proper oversight of digital assets. That self-evidently that requires more regulation. There's a certain storyline that goes: the more we regulate these things, the more we ossify these markets, the higher the barriers to entries are, the less competition we get. How can the answer to the competition problem in the financial sector be more regulation, which is probably what's causing the competition problem in the first place?
I think that regulation is a good thing. if it's done well and if it takes industry considerations seriously. I think the problem in Canada right now, and very much so on the digital asset side especially, is that regulation is only focused on risk and consumer protection, which are very, very, very important. But there has been very little focus on making sure that regulatory regimes also allow for Canadian industry to be competitive, allow us to innovate. And so I think that's the challenge right now. We want good public policy. Good public policy and sound regulatory regimes give us business confidence to be able to operate in a country. It's very difficult when regulation is fragmented, when you have to kind of adhere to 5 or 6 different regulatory regimes because there isn't one, public policy direction or one regulatory regime for a certain sector of the economy. For example, like digital assets is something that's kind of going through this right now. So I think fintechs and the crypto industry in Canada, the good players, we want regulation. We're asking for regulation. We just would like regulation that allows us to thrive, allows us to grow, and allows us to innovate, while also making sure that we go above and beyond to protect our customers.
Maybe I'll come in on that as well. Yeah, I mean, you definitely need regulation in the financial sector, as you do for food safety, for example. And a good regulatory system can be a real asset to a country. One reason that Canadian food exports, for instance, are very popular in a lot of countries is because people know that we have a good food regulatory system and you can eat Canadian food without being poisoned. I think the key is to have a regulatory system that keeps up with the times and actually have regulators who are actually thinking about what are some new businesses that could start in Canada? What are some new business lines? Let's create the regulatory framework for some of these new things, like Bitcoin, for instance. Instead of being very, very slow to change our regulatory system and having a regulatory system that's geared to a view of the financial sector from 20 years ago.
Yeah, I'll just echo both Tim and Sophia. So I think it's not more regulation, it's smart regulation. And some of that is really about harmonization and ensuring that actually the regulatory frameworks work in a way that they aren't working, essentially countercurrent to each other, or in some cases, making it very difficult to try to figure out, the best way to get to a practical result. The current framework does make it, quite challenging to innovate. And, that's certainly something that as a lawyer, I would feel, when someone's trying to come up with a product, often there's a lot of good intentions behind it. It would be a great product, but trying to make it fit as a square peg in a round hole is something that is expensive, is something that is difficult, and much more difficult for smaller entrants than larger entrants, but even difficult for larger entrants. So definitely, not saying that we need to add on, just saying that we need to, be very policy focused in regulating the financial sector to ensure that competition doesn't get lost.
Fair enough. Some of this stuff is net new, new laws, new regulations, and some of you have mentioned, I think, already on the call that we're still not, we still haven't completed some of these initiatives. They're still being discussed. Policies are still being developed. It's taken a long, long time. This to me can be a bit of a puzzle, especially when we're talking about net new regulation. Regulators are going to regulate, right? Like, let's say I have James Buchanan on the shelf. I buy into the whole politics without romance thing. I buy the premise that regulators are self-interested. They want bigger budgets. They want to be more important. They want to extend their reach. If that's all true, why is this so hard? Why can't the government do what it's designed to do, and when I talk to officials, like what they actually want to do? What's holding all this up?
I mean, I can take a stab at that. I think, well, like some of my best friends are regulators, I should say. I think regulators aren't actually necessarily looking to expand their empires or to add more work into their days, which are already, like, if you're a regulator, you're pretty busy. Like your days are full. I think the challenge is more and I think this is a broader challenge perhaps in Canada, is like risk aversion is very high, and it's particularly high in the financial sector. And the regulators were all kind of commended for seeing Canada safely through the great financial crisis of getting off for now 15 years ago. And you get a little bit of this vicious circle where, because you don't have a very competitive environment, you don't have major players pressing for change because they're not hungry to change their business models. Regulators are not hearing a clamor of people saying, well, we've got to get ready for this next frontier. We have to have a modern regulatory framework for this or that product. And that what that risk aversion does is it means that lots and lots of people have to sign off. Lots and lots of people have to be consulted. It's a very consensual model. Nobody, particularly a regulator, you don't want to be taking too much risk. And even for let's say the Department of Finance, so, which is, in some sense, has visibility in and kind of coordinates what the regulators do, although of course the regulators make their own decisions, but finance ultimately is responsible for the legislation. There's a lot to do if you're the Minister of Finance. Your plate is pretty full, and so putting that at the top of the to-do list for Minister of Finance or for senior finance officials, and then being able to reassure everyone around the table that that the amount of risk is acceptable. That's a tall order, and so it takes a long time for these things to go through all of these processes to be something that's politically sexy enough for there to be a political push, and then to get all of the actors on side. Because if one of those regulatory actors puts up a hand and says, well, I don't think that this is going to help consumers necessarily, and if it does, it's going to engender this or that risk, that person is going to be listened to.
Maybe I'll jump in next and pick up on something that Sophia mentioned earlier, which is really big tech. I think the specter of big tech is one of the reasons that financial regulation is so challenging in frankly, globally, because larger banks typically don't really see fintechs as their competitors as much as they see big tech as their competitor. And regulation that is in the process of being looked at and rolled out, a lot of it captures big tech in exactly the same way that it captures a very small fintech. And so that causes a lot of, I think, concern both for regulators and for a variety of different stakeholders. And it leads to regulation that's a bit disjointed and slow to proceed because, that overwhelming concern of could big tech, fundamentally change financial services and how to address that. So, I think it's kind of it's something that's always a theme when you're looking at financial regulation, although it doesn't roll to the fore as much as it should. And it's something that probably should be considered in a way to kind of parse out fintechs from big tech to try to address some of these concerns in a more targeted fashion.
Just quickly, before Sophia adds anything, if in fact she wants to, my day job is running an industry association of financial technology companies and anyone else who wants more innovation and competition in the financial sector. My experience with big tech companies is they're not betting on or even really putting any time and effort behind modernizing our payment systems, or at the very least advocacy related to that, open banking, central bank digital currencies, oversight of digital assets. My impression is that they don't need any of this because they already have probably quite a bit of market power. So, this idea that these regulatory regimes are going to help them a great deal, I feel like though a bank could bring that up as a risk, I don't see the Googles, the Apples acting in a way that really validates that concern. That said, maybe I'm naive. Sophia?
Yeah, I think Anna and Tim really summarized everything really well. I think the other thing that I wanted to just bring up is that when regulators have to also figure out how to regulate a new technology or an innovative technology that, maybe they don't yet fully understand, or maybe they don't yet fully understand the impacts of, both benefits and consequences, I think that also creates challenges. Like, I'm thinking about the blockchain and crypto and digital assets. This is all very new stuff, and it's very complicated. And so when you have, regulators who are already overworked, already don't have a lot of resources, and they're trying to also completely learn a whole new industry and a whole new sector, I think that also presents a lot of challenges, which is why I think industry can really position itself as a good partner, and really kind of be engaged and provide kind of that like specific technical details that maybe certain regulators are still lacking. I think over time this obviously changes, and the regulators get up to speed quite quickly, but there's always that transition period that poses a challenge, at least for companies like ShakePay. We have to do a lot of education, and we have to spend a lot of time demystifying things, really making sure that they understand that, there are different types of actors in the space that are doing things differently. Every crypto asset is different. All of those things are challenging. And so that's another thing I would just add on to what Tim and Anna brought up.
Tim, you mentioned risk aversion. That really resonates with me. I sometimes like to say that Canadian policy, well, maybe not the policymakers per se, the Canadian government is so risk averse, it's afraid to manage risk. The premise of open banking is that there's a risk brewing here, emerging. Canadians, rather than sharing their data in the most secure way that is available to them today, which they can do in almost every other industry that is not, heavily regulated like banking. Rather than doing that, they're actually just giving away their online banking credentials. They're giving away their usernames and passwords. The last estimate I saw from the Department of Finance was that millions of Canadians are doing this. So there's a risk right here. But in the name of risk management, we're not going to move quickly to manage this risk. It sounds kind of incoherent to me. That said, the job of policymakers is to identify and manage risks. So let's run through them really quickly. My question to all three of you is to talk me out of the position that more competition in the financial sector will make the financial sector less stable. It will make it easier for fraudsters to find weak links in the chain and basically steal all your money. And it will make it easier for criminals to use Canada as a haven for money laundering.
Shall I go first? Look, all of those things might be true. The question is, to what extent will they be true? And it gets back to what you were saying, Alex, is about risk aversion and where we are on that curve. As economists, economists like to be trade-offs. They don't like to be corner solutions. I mean, we could have an extremely secure system. I mean, we could, not trade with the rest of the world. We could be North Korea. I'm sure they have a very secure system, right? Yes. I mean, if you're completely oriented against, let's say you don't want any bank to fail ever, then you ensure that banks have like really, really fat margins. And if you do something that affects those banks' margins, is there a greater risk that a bank might fail? Yes. The question is, how big is that risk? And I would say where Canada is right now on that risk return curve, like we are way over on the risk averse end of that curve. And I think, taking a little bit more risk could generate kind of a significant return. But, I would say just on the last one, Canada is already a haven for money laundering. And part of the reason for that is, I don't want to get too much into this issue because I'm not an expert on it, but there's always been a feeling that Canada doesn't have either the resources or the will to really crack down on like a whole range of what white collar crimes, let's say, but financial crime in particular. And there, I mean, I think we need a more effective RCMP, for instance. I think we could have a long conversation, which we won't have here, about the RCMP and its priorities. But really, we need to be focusing our law enforcement on these key 21st century challenges to our system. Something like money laundering, I mean, it's certainly something we could worry about. It does give Canada a bad name. But I don't think it's the lack of. I don't think it's too much, or not. I don't think more competition in the financial sector is going to move the dial on that one. As I say, I think it's more. We need more and better enforcement.
I would agree with that. So I'll jump in next. I would say a lot of those issues are really, they're separate types of issues than competition. And yes, maybe more entrants increases risk to some extent, although I think, looking at it, you'd have to do a much more pinpointed analysis and look at the precise risk and the ways in which, things are regulated. And so, there are robust regimes dealing with all of those aspects, on financial stability, on anti-money laundering, et cetera. Issues around enforcement, I agree, Tim, that's probably where, you do find a lot of the issues. And there's been a lot of focus on anti-money laundering risk in Canada through, the everything that happened in BC and all the consultation papers there, et cetera. And, that doesn't mean that we're not finding money laundering still existing in Canada and frankly, some of it at very large banks. And so, I think it's a bit of a false, it's not necessarily correct to look to competition as a culprit here. I think, they are separate issues and really issues around, how well is our system addressing those risks? And, it doesn't mean that because we seek to encourage competition that we'll be adding to those risks necessarily.
Yeah, I agree with everything Tim and Anna said, and they've said it so beautifully. I think, we can obviously go down an economic and philosophical rabbit hole here in terms of the relationship between competition and instability in the financial sector. I think speaking as ShakePay, increased competition and having to work hard for our customers means we actually are forced and incentivized to manage risk more effectively. Compliance is a competitive advantage. And I think in a country like Canada, where Canadians want regulation, they want to make sure, that their funds are secure, their funds are safe. I think it actually motivates companies like ShakePay to go one step beyond. And I want to give a little bit of an example in terms of like fraud/security. I think a lot of fintechs, as much as banks maybe are saying otherwise, are really leading the way in this arena. So like, for an example, there are banks that as of right now, they won't let me set a good password for my online banking. They will only accept a 6-digit access code and of course like SMS 2FA. At ShakePay, because we're dealing with, we're a fintech, we're dealing with digital assets, our customers expect way more than this. And so we have to do way more. So we have things like integrated passkeys. We have like face authentication to authorize large transactions. We've got anti-phishing codes. We are doing things that the big banks are not doing. And so I do think that competition keeps you on your toes, especially for the smaller fintechs, because we have to go above and beyond to make sure that Canadians feel safe using our products. So that's just a case study from a fintech that's trying to make this work and trying to do the right thing.
We have an audience question about risk, which I'll ask in just a moment. I just want to remind everyone listening and tuning in that if you have a question for the panel, please leave a comment in the chat box and we will ask it on your behalf. Question from the audience about risk. Are there any concerns about the stability or security of digital currencies that could offset the potential costs, the cost-saving benefits?
Yeah, I guess this is a question for me. So I can start, and then I would love Tim and Anna to weigh in. Absolutely, and I think this is something that I alluded to in one of my previous comments about educating regulators. The digital asset space is massive. There are thousands of different kinds of digital assets. You've got things like fiat-backed stablecoins, you've got Bitcoin, you've got Ethereum, then you've got Dogecoin, you've got all of these other crypto assets. And right now, there's very, very little understanding of what makes those digital assets different. So for example, a fiat-backed stablecoin, one USDC will always equal $1 US. It's pegged to a stable asset that will never change. That's why it's used for payments. Bitcoin is decentralized, it's finite. You can't make more of it, which is why it's deemed more as like a store of value. And then you've got all of these other volatile currencies that really incentivize people to buy and sell them to make a profit. And this is exactly why ShakePay, we have decided we don't want to be in that space. If we're going to be in the digital asset space, we really only want to offer what, in our opinion, are the most secure assets, which are in Bitcoin and Ethereum. And so absolutely, there are, cost saving, analyses that have to be done and have to take place. And it's why we're having so many conversations right now on the federal level and with our regulators to really create more understanding that there are, just like traditional financial products, there are very big differences with digital asset products as well. And how can we understand those better? And then how can we regulate those accordingly? So yeah, this is definitely something where we're discussing quite heavily currently.
Go, Tim.
I was just going to jump in and with some more thoughts on regulator psychology. I mean, if I had a Bitcoin for every time someone had said, this is a flash in the pan, yes, it's worth X now, but it'll soon descend, et cetera, this is just a passing fad, it's a Ponzi scheme, et cetera, I would be pretty rich. So, I mean, regulators have never really understood Bitcoin. And to be fair, I think some of the advocates of Bitcoin and some of the other digital currencies have not, have not done a sales job on regulators. I've not communicated the advantages in ways that would make regulators comfortable with the concept. And I think in particular, and I think Sophia's hit the nail right on the head, any currency, there are different functions, right? There's medium, unit, standard, store. Those are like the classic functions of currency. And distinguishing between the transactional motive and the transactional use of digital currency and just the ability to invest in it as an asset, which you can invest in all kinds of things. They don't necessarily have to be currencies. I think making that distinction for regulators is actually really important because they're two very, very different things. And that way, there's a casino quality to some of the electronic currency world. And that's part of the demand for these currencies is that. But there is also, and it's now stood the test of a number of years, a demand for electronic currencies that's based on this transactional motive, and that isn't going away, and that clearly people do see benefits to using these coins. And again, as a regulator, it wasn't necessarily obvious, and I think there was a sense of, well, this is just this kind of weird thing that these kind of weird libertarian types on the internet have kind of dreamt up. So we're just going to kind of let them go off and play their kind of casino games. And we don't really know where this is going, and so we're just going to try and kind of seed it off from the rest of the economy, so it can't really do any harm. But again, I think we're at a point now where they have come of age, and central banks are now, of course, if central bankers are talking about digital currency, it's gone from from the fringes to something that's being taken very, 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 very seriously. So I just think there's just for regulators, there's just so much catch up that they have to do, and I'm glad that Sophia it must take up a lot of your day, is sort of holding their hands through that. But it's just going to be a long, slow thing because it's not, it wasn't their day job up to now, and to have to now worry about this as well, even though there are advantages to consumers, advantage to having an innovative industry, it's just not something they're going to be thrilled about doing.
Tim, you said weird libertarian types on the internet. I feel personally attacked. Next audience question here. Mark Carney said in his book Values that the most likely future of money is a central bank digital currency. The question is, what would this mean for regulated financial institutions and consumers? Noting, of course, which I'll add, that the Bank of Canada just recently announced that it's going to scale down its work on CBDC. Perhaps you want to comment on that too.
Tim, do you want to go first? No. Look, I think it's interesting that they've decided not to go through with it. I think that there were already digital currencies that are available to Canadians that could do many of the same things that a central bank digital currency could do. And so I guess one of the big questions that we've always had at ShakePay is if you already have Bitcoin, if you already have fiat-backed stablecoins, why did you really need a central bank digital currency? And when a lot of the benefits that the government wanted to have with the digital currency are already being seen with other digital assets. So hopefully this is a good opportunity to continue conversations with government around fiat-backed stablecoins, for example, because they do bring a lot of those same benefits that government had alluded to with a CBDC.
Yeah, I mean, I think that's right. And, you know, I think we have to be careful about, you don't have to be a weird internet libertarian to think that, the government shouldn't necessarily have to provide everything. I mean, we're used to central banks issuing paper money, and there were good reasons why that was the case. Although, there have been times in history where, banks, many private banks could issue money. So if you actually have something that seems to be working for now, my own inclination would be not to kind of rush in there with the product that people aren't necessarily clamoring for as well, just because historically central banks have been the ones to provide currency doesn't necessarily mean that they have to do it in the future. There'll always be a regulatory role that has to be played, but that's different from being the actual provider of the currency.
Another question here about the I'll describe it as this trend of money becoming increasingly digital, documented, recorded, and the increasing attention that the government is paying to the movement of money. A question from the audience is, what safeguards can we put in place to prevent the government from seizing assets when they shouldn't, or violating the privacy of Canadians?
So maybe I'll jump in because Tim and Sophia, I feel you've been doing the lion's share with the questions on crypto. I'd say there are already a lot of protections dealing with that, and I think, frankly, that's probably one of the reasons that the idea of a central bank digital currency is challenging. As Tim alluded to, there are issues around what is the role of government, and should a central bank be, closer to a financial transaction and that data, and essentially, almost stepping into the role of a commercial bank in that space. So I don't think at this point there is much appetite to increase risk in this area, and I think there's a lot of existing safeguards in a variety of different legal regimes that deal with those types of risks at this point in time. So I think, we are definitely, well protected as consumers, as users of the financial system from those types of risks in Canada.
Another question. Sorry, go, Tim.
Oh, sorry, I was just going very quickly. I mean, obviously you had during the truckers' visit to Ottawa, or however you want to call that, you saw the government step in, but I think subsequently we've seen quite a considerable outcry about the measures that governments took, in some haste, in what they thought was a crisis situation, and a lot of legal cases now that I suspect will end up establishing that the government probably, there's a good case the government went too far. So I think by having that issue actually sort of highlighted and having like a specific issue, I think it has actually sensitized everyone to the fact that this could happen. And I think, I think there's general recognition that, if that were to happen again, like the bar would have to be really, really hard for that to happen again.
Another question about risk. Anti-money laundering is now a key focus for regulators. For example, TD Bank. I don't want to mention them, but it's from the audience question, so I will. KYC requirements for banks are costly and thus proprietary. Is this an existential problem for open banking?
Maybe I'll jump in. And
I guess it doesn't have
banks
to be.
are,
I mean, other countries have open banking. I mean, the UK has introduced it, and the US. Have they seen a sudden upsurge in this sort of time. I mean, I don't get that impression. Is it is it something that would sort of stop the market from working because you would have your client obligations would now become more onerous? I'm not sure that that's the case either. So I think you would just have to kind of watch it, and again, I mean, it comes back to the risk aversion. I mean, this isn't the only tool available to deal with money laundering, and are you going to take on a bit more risk? I mean, that's certainly possible, but it's not obvious to me that it's a huge amount of risk.
My friend Jess Oliver at Wealthsimple likes to say that in every jurisdiction where this stuff has been rolled out, it hasn't been clawed back for any of these reasons. In fact, regulators have doubled down, policymakers have doubled down and tried to expand the scope and do more, which we should interpret as evidence that these things are safe, they are sound, they don't expose us to all kinds of risks. In fact, they make banks work harder for their customers at the end of the day. Speaking of working hard for your customers, when it comes to the extent to which Canadians complain about the lack of competition in banking or their banking fees or whatever, do you think the volume is proportional to the problem? Could Canadians be complaining more or less, I guess is the question. Are they underestimating the problem in banking or are they overestimating it?
Maybe I can jump in. I think it's really hard as Canadians to understand if we even have a problem in banking or to what extent how high that problem is, because a lot of Canadians don't know any better, right? Like they haven't lived abroad, they haven't done banking in another jurisdiction. I think the reason why Canadians are starting to focus on banking as being too expensive is because we're in an affordability crisis right now. Canadians are struggling to pay their bills. They're struggling with their day-to-day. I mean, there are certain things that have definitely become more expensive. Like before, the fee to waive your or the amount you needed to waive your checking account fee was like $1,000. Now you need to have $3,000 to $6,000 in your checking account. Canadians will notice these things right now because, as I mentioned, we're having an affordability crisis across the country. But do we understand the extent of the problem? I don't think so. I think a lot of Canadians still don't really understand what open banking or consumer-driven real-time rail is. They don't understand how these things could actually benefit their day-to-day. And I think that's where we as the industry and government need to work together to do more of that education. But I think it's hard to know the extent of a problem when you've never experienced anything else. But as I mentioned, I think because of affordability being such a focal point, I think these things are finally, becoming a talking point for sure.
So maybe to jump in to add to that, I agree. I think there's historically a lack of understanding of other options. And, frankly, we run into that when we try to explain that our accounts have no fees. People are like, really? Like, what about this and what about that? And it actually takes a while to convince people that there are no fees there. And so I think people are it's almost outside the imagination of a lot of the Canadian public that you could have another option. So I think some of that is just, a lack of maybe awareness for the average Canadian consumer.
One question here from the audience, back to our topic about competition. Is the government and the various agencies, for example, is the Competition Bureau uninterested in competition in the financial sector because it's a government policy to shield the big banks from competition, both internationally and domestically, by permitting them to maintain their oligopoly in the payment system through de facto control of Payments Canada?
I can have a go. Start off on that. I mean, this is difficult territory for the Competition Bureau. I mean, the Competition Bureau doesn't have a lot of people with expertise in the financial sector because we already have other regulators like OSFI, for instance. or the Bank of Canada, who have deep expertise in the financial sector. So if you're the Competition Bureau, I mean, you're being bombarded with requests to look into the grocery stores or airlines or gas stations. And so, for you to come in on the financial sector, and they have dipped their toe in there, but when you don't really understand, or you don't spend a lot of time thinking about the financial sector, which, there are prudential motives in the financial sector that you have to worry about in a way that you don't have to worry about to the same extent with, with grocery stores or gas stations. So there are additional public policy criteria that you have to worry about in the financial sector that just aren't as extant in the rest of what the Competition Bureau does. I mean, that said, I think, over time, it's expertise you can develop. But, to come back to what Anna said on the UK experience, the other way to go at this is to take the financial sector regulators that actually have that deep expertise and, add a competition/innovation agenda and a rationale, and have them actually be the ones who are trying to push competition in the financial sector.
Last question before we conclude. This is to each and every one of the panelists, so you have to answer. You can't dodge. What's one thing I didn't ask you about that you want to tell our viewers about?
I'll go. Because I think about the overall economy quite a bit, and also because I used to be Deputy Minister of Trade. I mean, we talk about financial competition as potentially helping consumers in Canada and also helping our small and medium-sized businesses. But, I think one of the challenges in Canada is we don't have enough big export-oriented firms. I mean, we do have an insurance sector. We do have some Canadian insurance companies that compete a lot internationally, to some extent in the banking sector. But, I think of a Shopify, for instance, that went from nothing to being a huge player in the tech world, and that's a Canadian company. I just think it would be great to be thinking about how do we have, a couple of Canadian successes in the fintech sector that can not just, provide competition within Canada, but can actually go out and, be a force in the world.
Happy to go. I agree. I think Canada is an amazing country. We really always want to do the right thing. I think we've been very good about understanding that compliance and strong regulatory regimes are important. But I think we also have to understand that we need to stay competitive in an increasingly globalized world. We need to make sure that we have made in Canada products and companies, and we're not just always relying on, the incumbents or on American companies that are coming over the border. I agree with Tim. We need our own success stories. I also do want to mention one thing, because I think there is a little bit of an assumption that a lot of fintechs are not regulated heavily, and that unlike the banks, where we're not having to go as far from a regulatory perspective in order to keep, customer funds safe, et cetera. And I just want to make sure that, folks understand that, a lot of fintechs, ShakePay included, we are heavily regulated. I mean, ShakePay is going to be regulated under CIRO soon as an investment dealer. And we're going to have to adhere to very stringent standards that a lot of traditional financial institutions, including Canada's major banks, have to adhere to. So I just want to make sure that, there's an understanding that fintechs are going to be very heavily regulated. They already are. And we are going to, it's not that we're just falling through the cracks and we're not doing everything we can to make sure customers feel safe. It's exactly the opposite. And so I just want to make sure that that's understood. And that's also something I know the industry, we can do better on from an education standpoint. But I just wanted to leave that with the viewers as well.
So maybe from my end, it's really picking up on that point that I made at the start about the challenger bank mindset. And I would just, give the perspective of, in the respective Equitable Bank, we're a bank that has been around for over 50 years, historically, involved in residential and commercial mortgages. And so there isn't a reason that others can't pick up that kind of mindset. And when I say others, I mean also regulators. I don't just mean banks. But I think, the Canadian financial sector would be better if that mindset was much more broadly adopted, of, thinking of ourselves as some entities and players and stakeholders that can challenge the status quo and create something better for Canadians and for the Canadian financial sector.
With Thanksgiving around the corner, it's time to say thanks. Thank you to the audience for tuning in. I hope this was a worthwhile use of your time. Thank you, Anna, Sophia, and Tim for your insights and for bringing your A game. Thank you to the Macdonald-Laurier Institute for hosting. If anyone in the audience has questions, please find a way to reach out. We're on social media. I'm sure you can go through the Macdonald-Laurier Institute. If you're in Ottawa, you can probably see me running or walking my dog along one of the multi-use pathways. Look for the bald guy with a beard. Thank you and enjoy the rest of your day.